Hey guys, it's the Market Sniper. Thank you and welcome back. We're going to be talking to you why a seminal moment has occurred right now in the metals market. You are going into the period where we expect substantial moves to start taking a foot on the precious metals. That's right. We actually had a whole bunch of, we were interviewing Bill Halter. Watch out for that one. That'll come out later. And a whole bunch of beeps were clicking and buzzing, and it's on this particular chart, the gold-silver ratio, that the key elements are showing up. By the way, I want to show you previously that this is not something, everything that we have scenario casted as our primary scenario cast has been coming to us. So if you look at previous videos that were done by myself here, we have been suggesting that on the gold-silver ratio, this was a big pullback down, that you would have a first impulse. You can find ones earlier where we predicted this bounce would occur over here with a subsequent down leg. We predicted that, and then a secondary bounce with a subsequent down leg, and then a final little squiggle to the upside and a potential down move, which would be disorderly from when we broke this basing ascending grind line. So this would move fast down to at least the 65 breakage level point, which means it could run 63, 62, even 59, depending how disorderly it's got, before you get some form of a rally. And then later to break further down as part of the head and shoulder analysis we did on the gold-silver ratio. Let's take you back to the primary chart, all the way on a bigger time frame, which is the monthly time frame. In other words, that this relationship is tapping out, the head and shoulder being right over there, that the seminal event of March 2020 was a reversal in gold-silver relationship, and that the 65 level, as captured roughly here by that pink line, is in fact a key reversal, and that this right shoulder breaks down at this point right now after making 3 impulses. So this is where we are. We're going to drop into this and show you a little bit more straight into the gold-silver ratio and why we think this is such a key moment. Don't forget, other commodities such as oil started to get a bid. We've seen the small caps, we've seen a few setups on small cap energy start to rally. So the threat on the energy side is also unwinding. So this we see as a slap in the face to this broadening structure, which is megaphone orientated. You want to learn how we look at megaphones and handle that. It's in our intermediate and advanced sections, only available on the Sniper Circle full trading metamorphosis program on HVF method. And of course I refer to it in all my regular updates. That was a falling wedge. You got a big bump. You came down hard, you then got a little bit complex, you zigged, you zagged, and then you came down hard again. And we're waiting for that final, the third little run. So this is 1, this is 2, we're looking for the third little rise, and we don't expect it to be much, and you might already be getting the down leg from that straight here. In short, the break on this basing ascending grind line could be very close. It could be very close on what is a large trumpet, a broadening structure. So it goes beyond the typical megaphone structure, and we are looking at the fractal right here with a real squeeze across the top for breaking this level. That will say goodbye to the 80s. Big seminal round number. We can highlight this for you. Goodbye to the 80s, or even the 75s for that matter. Also a very interesting number, 75, of course, 3/4 of the way to the full 100. So it's also an interesting one. It'll say goodbye to both those levels, possible return move when you break, and then bomb all the way down to the 65. That is going to begin a journey that's going to see silver's price go substantially up. Gold's not even more so, silver's even more so, but gold goes substantially towards our 2,905 target. Where does this head and shoulder overall end up? Down. Well, let's turn the lights on all the many draws that we've done on the lower time frame. Here they are, and you can see it. We will first show you why we think this is also turning. So let's just do the low time frame, and we'll remind you of the higher time frame shortly. This is the rally off our basing ascending grind line in a channel. You broke that channel to the downside, and you came out after meeting the key round number of 80. Who'd have guessed it? How many people have 80 drawn on their gold and silver ratio charts, if they even have one? How many had 82.5? All these key levels. Not very many, I suggest. How many drew that flag and pointed out that was a break, and that flag over there, and that this is another break and a descent, a disorderly descent, and an attempt to rally here has been rejected, it seems. And if you continue to trade down really hard and fast, you will be at that key moment right there at the breaking of the bagel, which will begin a commencement for a very abrupt downside. Now, it is possible that you'll go part of the way down and you could actually bounce here for a bit and maybe have a secondary rally and make another period like that. So it can extend and then come down hard again, and then it could bounce even again one more time and then come down hard and then go. So please understand that we are suggesting if it goes straight away here, you'll be into the action. It's not far for that to happen, but all of these options could happen. It could go straight away there, and then it could, of course, go as we've drawn it straight away here. All of those would see a fractalization structure along this key level. Once you let go, you are going to absolutely smash, in our opinion, the 75 level, and you're going to head your journey for another drop right through the 65 level on what is a macro head and shoulders. Let's show you that macro head and shoulders. So we're leaving the 2 hourly, we're going straight back up, straight up to the monthly. There it is with the draw, the neckline 65 that you can see over there. Let's make sure this is log scale so that everything is sitting in the right place. The head and shoulders target for us is down to the 32/33 level. 33 on the head and shoulder. You're from neckline 65. I should have said 66 and 33. Oh, that would have got the Freemasonry people excited. This 75 level, let's get the blue line back in. We seem to have lost it. Put him in there. Where's the 75? This is going to fall. This is our prediction as part and parcel of losing its ground. That's right. So let's get it right on the nose, 75, and there you go. So that's going to be a key level that'll break after this basing ascending grind line is broken, and we expect a dip through that. I think you will get a rally before you start a journey to 32, and on the relationship between gold and silver. And by the way, if you are there, and let's say gold, you make the target and gold is now $2,905. Don't forget the $5. $2,905. I joke, of course, there's no point being hyper accurate on something that is geometric. But let's say, I call it 3 grand, and you are a third, 33, let's just say 33.3 down here. That means multiply that by 3, it's 100. So 3,000 divided by 3, $30, and then multiply by 3. You'll be at $90 silver, knocking on the door of 100 at a 33x. So I think we could already be in and around heading for the 30s over here, and doing quite dandy, getting into the late 30s, possibly early 40s. By the time you've dipped through the 65, you will be on the 90s if gold is 3,000. So if gold has made its way to its target and is about to rest, you typically rest after a target's being made. That's why I'm making these assumptions. You typically rest. You get a bounce, and you stop going down and you go up a little bit, you go sideways a little bit, and you go up and down, and you muck about, do the hokey pokey, etc. So all of that's to come. That's likely to occur on gold's target, which is likely to be at the footsteps of the 3,000 mark, which is likely to mean you will be at $90 silver. Who wants $90 silver? Hooray! Is it the same dollar? No, it's going to be a weakened dollar. They're proliferating it like gangbusters, and things of value that can't be printed will hold some value. That will be very good for precious metals as a whole. And of course, eventually there will be, in my opinion, a great reveal of the fact that the East and the Grand South, the BRICS, have, although there will be no convertibility, no government wants the discipline of being able to have their currency swapped for metals. No government wants that at all. There will be no convertibility, but there might be a reveal of how much China truly holds in gold holdings, how much India truly holds, how much South Africa and Russia truly hold, and we may have a similar reveal of the great deception of how much isn't held in Fort Knox for the devaluation and de-dollarization that will inflict a massive loss of wealth value on those in America versus the other part of the world that will have appreciation as a result of that holding. It will be a confidence play. You'll suddenly start believing in the currency that has real backed assets, oil and other things. Okay, so that's your gateway for silver to be not far off $100 on that target make. And then of course if you go to single digit, which will be sub 10, and we have had a real push up in gold. If you go to single digits, let's say you only make 9.99 as single digits, so call it as near as damn it as 10, which you should actually overshoot to the downside, because there's actually only between 6 and 8 ounces being dragged out for every ounce of gold, and of course silver is being consumed, it's not being kept and stored in jewelry or bullion. So you are actually going to see a situation where potentially if gold is near 10 grand and you're at 10, 9.99 single digit, you could have $1,000 silver, and that would be rather fabulous. I think rather fabulous indeed. I say again. Okay, so that's pretty bullish. And of course gold versus the other crosses. So let's just look at the gold charts as well. Overall, we've said repeatedly, let's take the eye off a little bit and reduce some of the noise. We've got a lot of alerts that were pinging while we were talking. So the key point we've made is that seminal breaks occur. We've made this before, and I'll make it again. Seminal breaks occur, 2000 mark here. Let's do it again, 2000 mark here. Very, very small period, monthly chart. You've only iceberged at a wick level only above the 2000K mark. That's the third. You have your biggest drawdown there on the second. You had your longest here there. It took a while. Of course, we only did a 0.25 rate increase. We thought this would go down on gold. Fed came and did a 0.25. It actually went up and pumped through. But then they did 4 0.75s, and that's your down leg that you got. So the next break over here is the one that holds and turns this into a support level and continues to the upside, taking you to the threshold of the 3K mark. By the way, very similar thing happened. This was a broadening structure though. A very similar thing in terms of overcoming a key level happened at the 1000 mark in 2009. Let's take you back to 2009. You may or may not recall, you may not be a gold guy back then. We'll stay on the monthly chart over there, but in 2009, you had the $1,000 mark, roughly there. You had one hit, you had two hits, and then you got a beautiful HVF, squeezy, Japanesey. This was kind of almost a hit. It was a sub hit, and then you broke with momentum. So 3 impulses again, there, and there, and then you went boom, and then you went right the way up to the 1900, the next 1000 key level of significance. Boom, that was huge. And of course that was the beginning of quantitative easing principles. Don't forget Brown's bottom at the $250 mark, where he sold all of Britain's gold in and around the 2001's 2002's period. What a great investor Brown was for the British people. I wonder who he sold it to. Somebody who knew they were going to benefit really, really well. He sold all your gold and silver. That's right, at the paper low price of that, and let somebody else's name go on your assets. So you can see that. Now I also highlight that the silver has a far bigger version of this. So that's on the monthly. I'm going to remind everybody of this. These 3 knocks and then a lady. This is how you look at silver. This is now a 6 monthly. 2 candles is an entire year. This takes you right back to 1980, first half of 1980. That was the last time you went through the through the 45 to the 50 range. So there's your essentially somewhere between your 45.5 is over there. So 45, let's do the 45 line then, and your 50 line is somewhere over there. So this is your big area there. Your 45, you wicked above it for a very short period. This is, of course, let's just do the one line at 45, Francis. Don't be so stupid. There's the one line. So you iceberged above it there. You iceberged in 2011. That is some unbelievable 2011. That is some 31 years later to come back around. That cup took 30 years, 31 years to come back around. And of course, this is handling. So of course, if we get to the 45, which is where you will be at the 65 neckline. So think again, if you're at a 65 neckline, it's quite likely that you'll be at $45, 38 to $45 range. That will mean your silver will have had a return up here. There I expect it to be rejected again. So you will potentially run that 45, but you'll be rejected again. So you'll have another wick event over here. I would take target profits there on leverage positions, but then I expect a much shorter handle. So that is 2011. That is 2011. The other date was 1980. That's right. 1980. That's why it's 31 years. That's 2011. Of course, this will be 2023, which will mean that you will have, for the secondary bounce and come back around, you will have been in and around 12 years to bring you here to the point of 2023. And I think the next cup will not be nearly as deep a dip, but could bring you like that, and then you smash it with real momentum. This is a hugely ascending 3 mega impulse structures, which you are now in. I expect the next move up, and then you will go and you will smash it. And that could take you to the threshold. That will protect you from the hyperinflationary and stagflationary forces as unleashed by your central banking cartel that work against your view actively, that have inflation as an active policy for impoverishing their citizenry and tax extracting their citizenry, so they keep you working, keeping themselves in power. And that is the great game that you've learned and understood. And that is the reason why the BRICS will not do convertibility on any new currency. However, they may create, as a new broom, a greater degree of early new manager is going to have good principles in terms of how he will custodian versus the old guy who's started abusing you so badly and confiscated Russia's money, for example, out of the Swiss system, etc., etc., etc. So that will be a faith-based greater confidence in that BRICS system on the basis that those nation states hold large amounts of commodities in the form of oil, gold, and potentially silver, and also, of course, in Brazil, lots of commodities such as fruit and veg and everything else that gets grown, and that will mean a greater degree of backing. A greater degree of backing with physical tangible assets that will give you faith in the digital proxy that they will have created for you. Be careful, use it only for convenience. You need physical assets yourself. By the way, don't forget our Pure Gold link below. You can buy precious metals, platinum, palladium. Can you get palladium? Not so sure about the palladium. Silver delivered to your door. Beautiful ounces, beautiful, beautiful, beautiful bars brought to you right at your door. Kilos, ounces, coins, you name it. They're all available. Lovely group of guys that want to get to know you, and they will deliver almost anywhere in the world, including the United States of America, Australia, all of them, but not Nigeria. Cause Lagos. I don't know. It must be because they're racist. No, I'm kidding. It's just postal and delivery. So Pure Gold link below. Also, you can do Bullion Vault, where you can accumulate the digital gold, sell off that once you've accumulated. You can get the value of the upside of the investment as it goes up. And then at the same time, you can pivot it into physical. You can sell out and take a delivery of a bigger scale order so that you can even get free mailage if you're doing above a certain size. So that is the gold and silver world. Is there anything much more that I want to tell you? I think I'm going to keep this video short. I want to highlight to you across the currencies, though, that gold has made new highs more recently against most of the other currencies. This is the last high against the dollar. You can see how it has continued to creep up against the pound. Now, if the dollar has a sustained period of weakness, you will finally get those new highs in the dollar points. You can see how it came for the pound over there. I expect gold to be making new highs against all fiats in due course, of course. You can see JPY, by the way. Look at that for a lovely view. That has been non-stop. By the way, 6 years ago, Tips TV today, we shared the following. Let's show it to you. So this was our appearance in good old Tip TV days, some 6-7 years ago. 6 years ago, it says. You can see it was a much smaller channel back then. 914 views in 6 years. I think that's about 10 people a year, isn't it? Anyway, that was way back then. These YouTube channels take a while to build. I tell you, no gifts, no free gifts. We were highlighting this key structure on a much bigger time frame, monthly. Good old Saxo platform at the time, gold JPY, monthly time frame. And we were highlighting the squeezy Japanesey and saying, now it was controversial because the yen has actually been a very dominant currency, was very strong 6-7 years ago, was generally did very well against most currencies. The Japan, you know, the great industrial nation, the yen was a really robust currency. Not so much anymore, you might say, but at those times it was a different thing. It's often certain trades look obvious in retrospect that are less so at the time. It was controversial view. Gold and it had been, you know, pretty dull generally as an investment vehicle, had its spells, but certainly wasn't in one at the time. And the argument was big years for precious metals and weakness for the yen, a weak period for the yen and big period. You can see the high here came in and around the cusp of the 2012-2013 year for the gold-silver ratio in the Japanese yen. Now, had all my Japanese viewers, all three of them, taken our advice back then in the cusp of 2013, how might they have done? So let's just show them. Here you are. We are identifying that 2012 period. That was the high, 2012 going into 13 over there. That was the structure that we warned them about and said that macro, you need to be short yen, long gold. Now, in and around that period, you could have got long gold multiple occasions. Let's not even take the middle. You were at about 135. You actually had a low at one point of 116. In fairness, we were already talking in 6-7 years ago, so it was around about here during this period that you were getting to the business end of a period that will see the yen and gold. That's in and around the area that we were focusing on, that you're going to get a period where you're going to get absolute overperformance in precious metals, and this particular fiat looked the weakest of them all. The one currency that of the majors, remember, we're not talking about the Turkish lira here, we're talking about a major industrialized nation. We were looking at the cross-country, doing 360-degree analysis and saying in that video on Tips TV with the good old Mike Ingram in London offices over there, that this was probably going to go upside. You can actually see the trade at the time was 136.998, so on the doorstep of 137, and you can see we were wishing each other a happy new year for the year of 2017 that it was. So you can see you were in and around this period here, this block here, and you went up, down, and then the move began. So it extended slightly before the move properly took place, but that is definitely a breakout bar. When you took out the 148, it was clear, and that was the beginning of a move, and you've not looked back. In fact, you've got some small setups on lower time frames along the way, by the way, including over here, which we did reiterate calls for, and you've had nothing but upside continuation. If you compare the progress in 2017-18 from the breakout of this move over here to any other against other major nations, you will find that this was your best performer. So it's great to sometimes see. I was looking for some legacy material and I just saw that particular video and said we haven't spoken and done a redux in ages, and that is the let's put gold silver on the bottom, gold dollar, my apologies, on the bottom there, to compare it with the yen period, so that you can see how actually the dollar has been far better than the yen in terms of holding currency value. So let's see it. They're moving in sync together. There you go, there you go, there you go. So 2017 and going into 18, you can see from this breakout candle, the percentage move that has occurred. We'll take it from the top there. So from there, let me go. Oh man, Why did you do that? The overall move. And if you take the same place, we've got it aligned to the same place, is my assessment. Hold on to the top there. To where the gold against the yen. And what you see is that you've gone up 86% in yen terms, and you've gone up 36% in dollar terms. So it's pretty interesting performance. I'd imagine on the Swiss franc that might be lower still. So still a good hold since 2017, say against the franc. You may have made 25%, but 17 to 23, you're going to say, well, that's pretty decent. Well, we're taking the break from the 19, so let's be fair. 19 to 23 for the 4 years that it actually broke out, that key macro trade. So we love to draw big charts, big time frames, and make big calls. Even if you did 20% against the Swiss franc, it's still a good hold. But 86% since 2019 to 23 in 14 on a major currency. Wow. This has been the period of yield curve control and all the damage that it does to the Japanese yen. And America is coming to do the same again too. They will be doing the same again too. They will be maintaining money supply in ever-growing deficits as a result of Chiffin's dilemma, where they are proliferating dollars and taking goods, more goods than they can afford. So this is a very, very interesting chart. You can also have a look at, let's put some other crosses underneath here and see if anybody did better. What about gold on the Australian dollar from the same period? Let's have a look at the same tool in and around the same period. That was, again, that was 3rd of June, 3rd of June. That is a 40% move for that. It's again 86%. It's significantly more. But the key lesson, let me take a pig. How about the rand? This is now an emerging market currency. An emerging market currency. Gold rand. Whoops, let's just make sure they are aligned. Are they aligned still? I think they are. Hopefully they are. There we go. Let's get rid of it. Go away. And measure it. So 3rd of June, 3rd of June, 3rd of June. Let's take the close of the 3rd of June, not the high. Even against the rand, the yen was a better call. By the way, to borrow in yen, you would have paid literally nothing to short the yen, whilst in South African rands, the average interest rate's double digits for prime borrowing. So the carry cost of shorting the rand to buy gold, where you would have got below 75% on the gold return versus the carry costs on the yen, where you actually would have borrowed for a pittance. So again, you've actually got an emerging currency that's done less badly than the yen in gold terms. Only the lira will be worse, I would imagine, and possibly the Indian rupee. It's not been a star of the currency markets itself. If we take the euro, the next biggest, and we take it from the same period, we take it from the close on Monday, the 3rd of June in that period. During that period, you see I have again 43.66, plus you would have paid a higher interest. Not significantly, but euro rates have been higher than the Japanese rates. In fact, Japanese rates are the lowest of the world, with the occasional exception of the Swiss. So you would have had a 43% return and a higher carry cost over the same time period from when the breakout occurred. So let's put the Swiss franc in there as a currency. Let's take that same period, measuring stick again, please, and we go to June. When is it? That's 3rd of June. That is the close to where we are today. And that is probably my guess of what will be the lowest return you would have had, 23.2%. Now, during that era, the yen and the Swiss franc were comparably compared for strength, not anymore, I would say, but they were considered very hard currencies. The difference in performance that a 23% over 4 years gives you versus an 86, an almost 4x performance is huge. And I will say to you that the borrowing cost on shorting the yen over those 4 years would have been cheaper in Japanese currency than the Swiss franc would have been. Although, again, pretty close. The Swiss franc had a few very low to zero, close to zero moments. The yen is at generally 0.25. It's now at a current high of in and around 0.5, whilst, of course, your higher rates in Switzerland. So that right there is gold's relative performance versus others as per a macro call way back when we were saying a long-term structure is developing, and at a macro level, the currency that will be one of the weakest of the majors against gold will be the Japanese yen, and that the gold will perform. What you could have also done, we can have a look at how, let's put silver in the bottom box there, and let's find if we can get a silver versus the yen. Now, silver hasn't been unleashed to quite the same degree, but if we have a little look against that, when the breakout, so the breakout was done on gold, Japanese yen, but we had, I think it was June 03, was it? Monday, when was our, let's go back to our gold Japanese yen breakout. That date was 3rd of June 2019. Let's just take that same date. Silver dipped super low on the events of March 2020 and actually would have gone into negative equity. In fact, anybody who took that breakout, I imagine, during that period could have well have been stopped out. June 19, there we go. June 19, that's that one. So that is gold, silver against the silver over there. And had you done the same June 19, June 03, 19, that is how it's performed against the yen. 111% against the yen. So we spoke about both the gold and the silver being taken against the yen. You would be on 63% against the dollar. That was part and parcel because silver was fairly low back then. It was at about $15 then, and you're at about 24 now. A big point though, you wouldn't have been able to be leveraged. You could have been investment, and you would have had to sit out the spike of the events of CV19, which illustrates why many of you probably only have the stomach for leverage trading gold, because silver is super volatile. Note the absolute number is higher. The average, the return on silver is 111%. In my opinion, is it's only just about to start get going. Whilst on the dollar it's 63%, and you would have borrowed and paid more in dollar terms to short the dollar. Whilst again, as I say, it would have been very cheap in the yen, but you would not have been able to have too much leverage, and many people would never have expected a capitulation to 1,239 yen and $11, $11.50 when you were sitting at $15. That came pretty soon. However, in gold shrugged that off, and that is the downside, the increased volatility that is introduced by silver. You pay for that additional performance in volatility. You might prefer in the early stages, if you're not 100% accurate on is this the bottom, to start with moderate leverage on gold trades if you are not already a practitioner leverage trader, do not understand stock placement. However, you could also learn how to do all these things by clicking the link below and booking a call on how we plan to maximize our wealth, both through investment in precious metals, in protected entities against a totalitarianism state of out of controlness all over the planet, and how you can maximize using your leverage trading to do this with HVF method. The gold and silver ratio is your key, and it is our opinion that there has been marked moves afoot. Go and have a look and enjoy our macro videos with just me, my mum, and someone's dog who watched them way back then, and you can see if any of those are actually turning out okay. We, of course, will show you the ones on the precious metals during precious metals season. Okay, until next time, don't forget to click the link below if you wish to book a call, become part of our member of community. We aim to help people build a wealth on a multiple of their original investment and improve their level of protection as well through the other additional services that are available and offered during what is abnormal reset macroeconomic times. Okay, until next time, I'll catch you later. Thanks for watching. Bye for now.